All right, guys, so this is the trading journal that I was talking about. This is what you guys are going to use or should be using to, enter and plug in each and every single one of your trades, regardless of you making money or not making money. This is something that should be used. So I'm going to walk you through it. Now, this is how you plug in a trade. So obviously, you guys can see I have 3 trades plugged in already. So I'm going to plug in a few trades with you guys. Now, there's also a link down below that I'm going to share where you guys can actually take this journal, download it. I'm using it right now on Numbers. Right, Numbers is basically an Excel for Mac. If you don't have Numbers, you guys can use this on Excel. If you don't have Excel, you can also use it on Google Docs. Right, now my next trade, number 4. Right, these are my trade counters. I'm gonna put my entry date. Now let's say today is 10/22. If I put 10/22, that's the date I'm making the trade. Let's say I'm trading Tesla. Now, a few things I want to bring up. Depending on what you're trading, you can obviously change that here. Let's say I'm looking to trade options. If I'm looking to trade options, I can obviously change that here. Call options, put options, am I going short, am I going long? Now, if you select options just for yourself, just to kind of take the trade from there, you can put that, hey, these are weekly options, right? Let's say they're expiring 10/25, and what is the strike price? Right, if I call options, let's say the strike price is 300. Just for your reference, so you can distinguish. If you don't want to do it, it's fine, but I would still kind of put the expiration date and the strike price, so you kind of have an idea of what you're trading. Are you trading weeklies or whatever the case is? Right now, if I'm doing options, I can put options right here. Now, what time did I enter the trade? Let's say I enter the trade at 10. Oh shit. Let's say I enter the trade at 10:44 a.m. Right? I just put that in. Now you can get the trade execution time from your platform. It'll show you what time you entered. So this is something that can be done after you're done with the trading day. What was your entry point? My entry point was $5.40 for this contract. How many shares? Now remember, for contracts or options, it's going to be a little bit different. If you guys are trading 10 contracts, you're going to multiply 10 by 100. Right, which equates to 1,000. So here, I'm now gonna put 1,000. Now, if I just put 10, it won't really work. I need to put 1,000 because once again, I'm trading contracts. If I'm trading 10 contracts, right, and it says call options, whatever amount of contracts you have, just please multiply it by 100. Now, the next thing is what was your stop loss? Now, like I mentioned on options, having an exact stop loss area is kind of hard, but you want to understand what your risk reward ratio is depending on the trade, right? So let's just say, hypothetically speaking, it's 4.9. Let's say I'm looking to take profits at maybe 6.5. Maybe it goes higher, maybe it goes lower. Now, right when I do that, these numbers are automatically plugged in. It shows me my trade risk, how much I'm risking, and how much my initial target is. Then I put my exit date. Now, typically, obviously, if you're day trading, the date's going to be the same exact day, 10/22. The time is what I really, really, really care about. What time did you exit? Let's say I exited at 10:52 a.m. You guys can see my entry point, my exit point. The time right there. What price? Let's say I exited at $4.72. Cool. How many shares or how many contracts? Did I exit my full 1,000 shares or 10 contracts, or did I exit earlier? Let's say I did my full 10 contracts. I put 1,000. Now what happens automatically is it'll adjust right here. But let's say I didn't sell my full position. I sold half. Let's say I sold 500 here, 5 contracts here, and then I sold another 5 a few minutes later. Right, so I sold another 5 at 10:55. Now, if you notice something, right now my loss is going to showcase a massive. My P&L is going to showcase a massive loss, but that's because I still have an open position, as you guys can see, my open position. Now, when I exit, when I put in the exit price now, let's say 4.5. How many contracts? 5. 5 times 100 is 500. Now, open position 0. Now, this is the proper number, right? Next, my commissions. You guys can also get commissions from your platform, and you get your end of the day trading statement on how much money you spent on commissions. Let's say I spent $6.92. that automatically gets factored in here too, because I obviously want to see how much I'm paying in commissions, especially if you guys are trading options, because options obviously have a higher commission amount than just taking on shares. Next thing you're gonna do right here, this automatically shows you, was it a loss or a win? How much did you make? How much did you lose? You guys can see we lost $796 on this trade. Now, if you take a look right here, this is where you guys can give your trade a rating based on whatever you think. Hey, was it an A? Was it a B? Was it a C? How good was this trade? Obviously, A being the best, C being the worst, B being somewhere in the middle. And you obviously want to have reasons. Me, I'd give this a C. The reason I'd give it a C is because when I go through this trade, one thing I did not like the fact that I obviously didn't follow my plan. I exited way too late. What was the reason for that late exit? What was the reason for losing more money than I originally anticipated on losing? Originally on this trade, I was supposed to lose $500 if the trade went against me, but I lost $796. Not a good trade. That's never a good thing when you lose more money than anticipated, because that showcases you didn't follow your plan. Now, there may be times where you have a solid reason behind that, but if you don't have a solid reason behind that and it was solely just emotions, then that's not a good trade. Your trade confirmations, why did you enter? Let's say breakout on the 5-minute chart. On the 5-minute chart, okay, saw buyers stepping in. Let's say market internals were strong, right? Let's just say that's my whole trade confirmation. Now, when I go here, this is gonna show me my pre-reward risk ratio and my after. Obviously, if it doesn't match or it's lower, there's an issue, right? So if you guys look at the first trade, before I took the trade, my risk reward ratio was a 3, meaning I was willing to risk $1 to potentially make 3, or make $3 and risk 1, right? After the trade, it was not even 1. So in simple terms, what that means is, if you look at this trade, I made $1,500, okay? But when I go to the actual trade, I was willing to risk $2,500 to make $7,500. So my risk to reward ratio in this situation was a 3. But when the trade was done, it was not even a 1, right? So that's a bad thing. But you want to understand, why did that happen? Sometimes you might have this difference, but it's totally okay, right? Sometimes you might have your after reward risk ratio under a 1 or 0.25, but that's okay, right? Because sometimes the stock may reverse. You might exit before the huge dump, so that's better than, you know, having a profitable trade at even 1,500 where you were supposed to make 7,500 potentially is still better than, you know, having a red trade. So sometimes that's fine. But now there's other situations where it's not really fine, where, you know, where the trade actually ended up going higher. So if that same trade ended up going higher and you sold way too quick, that's where the issue kicks in, okay? Now, when we progress, your initial investment, this is basically how much you invested into this trade. Then comments on trade. What are your comments? Exited way too late, didn't follow plan, missed SL stop loss. If lost, reason. What was your loss? Why did you lose money on the trade? Was it because it just went against you? Did something new pop up? Like, what happened, right? You put that down. That's how you're going to record one trade. All right, so let's plug in another trade. Let's say I'm going to put number 5. What's the date? Let's say same date, I traded another stock. Let's say we are trading stock BA. Okay, I put in the ticker symbol. Am I going long? Am I going short? Like, what am I doing with this exact trade? I'm going long. What time do I enter? Let's say I entered at 9:55 a.m., right? 9:55 a.m. What was my entry price? My entry price was, let's say, 321.77. How many shares? 100 shares. What was my stop loss? 319.5. What was my profit target? My profit target was 329.8, right? Now, obviously, on paper, this looks phenomenal. I'm risking $227 to potentially make $803, okay? Now, that's not the aftermath of the trade. Now, what we want to see is where and when do we exit. Let's say we exit the same day. It's a day trade. What's my exit time? Okay, I exited it, let's say, at 11:15 a.m. What price did I exit at? Let's say I exited my full position at 327.662. How many shares? My full 100 shares. Now, when I go down here, it's going to show me automatically win. How much did I win? $585. Now, when I go back to this trade, obviously, I didn't make the 803 anticipated. I made 503, which is still fine, okay? Now, my question here that I want to understand, number one, is I got out at 327, okay? That's the price I got out at, 327. Now, since I got out at 327, what happened after? Why didn't I wait until 329? Now, it's not a bad thing. I'm not saying you're wrong for not waiting, but you want to understand. Like I said, the whole idea of journaling, guys, is for you to understand each and every single component, understand the way you think, the way you operate. So at this point, I want to understand what is happening. Why did I sell at 327? What happened after I sold? Maybe I sold at 327 and now the stock is at 321. Maybe I was not confident anymore, so I had to sell, right? So that's something you want to understand. Now, moving forward, what's your trade setup? What rating do you give it? A, B, C, right? And then obviously your trade confirmations, why you got in, why you got out. And then right here is your pre-reward risk ratio, and then after. Pretty okay, pretty fine, nothing crazy. And then right here, once again, your initial investment into the trade. Any comments? If lost, why'd you lose? Or if you made money, why do you think you made money? What's something you could have done? So that's the whole idea of tracking, right? Now, if you guys go down here, it'll show you your P&L. You can see on these past 5 trades, we are up $2,000, which is obviously good. Now, we also have a dashboard up here, right? Now, the whole idea of the dashboard, it's just going to show you, your full portfolio. How much did you start with? Did you add any money? What's your account at now? $30,740. What's your P&L? $2,000. What's your value? $32,000, right? How many trades have you taken? 5. Number of winning trades? 3. Number of losing trades? 2. Percentage of wins, percentage of losses. So it's breaking that whole concept down for you. And then when you go right here, this is not loading on this because I have it on Google Docs, and Google Docs is gonna probably load. But this is just showing you your pre and after risk to reward ratio. This should not be off by a lot. So that's basically calculating these two components right here. Okay, this is the trading journal, guys. Download it. There's a link below. Use this journal. It's extremely helpful, and start tracking your trades starting now.